On today's show, I have the Entrepreneur of the Year 2022, who's also been awarded Business Leader of the Year in Investment Management. He's a sought after financial expert and has been on over 300 talk shows, including the likes of CNN News 18. His experience includes the Big Four to being a CFO of DLI, a part of the $200 billion Guggenheim Partners. A very warm welcome to the show, Tushar.
Thank you so much, Kaushik. Thank you for having me. I really love your show.
Thanks. So you've been in the startup space for nearly a decade now. I've tried raising capital for my own startup in 2019, and I eventually realized it's easier to build a franchise network. Of course, that has its own challenges, but eventually I managed to build it and even sold it off. But this is something which is on top of the minds of most founders. What is the one thing that you must have before you invest? And the reason I'm asking you for just one is that it's very easy to give five, but you will be the absolutely the right person who can give that super critical one factor.
Well, Kaushik, from my experience, the one super critical thing you must have before investing in a startup is a clear and compelling value proposition. This means that the startup's product or service must solve a genuine problem or address a significant need in the market. And it should offer a unique and valuable solution compared to existing alternatives.
Okay.
And a strong value proposition not only attracts customers, but it also captures investor interest by demonstrating the startup's potential for growth and sustainability.
And what comes first? Is it the horse or the cart? So is it the idea or the founder?
Well, both the idea and the founder are crucial components of a successful startup, and they are interconnected in many ways. However, if I had to emphasize the single most critical factor between the two, I would say the founder is more important than the idea. A skilled, adaptable, and determined founder can turn an average idea into a success through effective execution, resilience, team building, and the ability to pivot. The founder's passion, network, and leadership qualities play a vital role in attracting resources and shaping the startup's trajectory.
So let's continue on the founder perspective. So I'm a huge fan of Naval Ravikant, who's built many startups since 1999. And it was only in 2010 that he launched Angel List, which of course shot him to fame. You've obviously seen your own share of failed founders. So how critical is the mindset that you need to fail to be able to succeed?
Well, absolutely. The mindset that you need to fail to succeed is a topic that resonates deeply in the startup world. As you know, that more than 70-80% of startups don't make it beyond the fourth or fifth round. And you are right, Naval Ravikant is a prominent figure who's been through the trenches of entrepreneurship. His journey from building startups since 99 to launch of AngelList in 2010 is a testament to the roller coaster ride that founders often face. Now about the mindset of failing to succeed. It's a fundamental perspective that echoes loudly in the startup world. Failure isn't the end goal, it's a teacher. Viewing failures as stepping stones towards eventual success transforms setbacks into valuable lessons. This mindset breeds resilience, innovation, and humility. Entrepreneurship is a wild ride, often marked by unforeseen challenges. Embracing failure as a part of process encourages founders to bounce back stronger. It nurtures a culture of adaptability and risk-taking, pivotal for groundbreaking ideas. Failure also promotes a deep-rooted growth mindset. They underscore the importance of continuous learning, reminding us that initial plans might need adjustment. This humility cultivates connections within the startup community, creating a supportive network of individuals who have grown through adversity. So, in the podcast exploration, remember that the fail to succeed mindset isn't about glorifying the failures.
True.
It's about leveraging setbacks to build a more robust, resilient entrepreneurial journey. It's a mindset that can propel startups from stumbling blocks to success stories.
Just out of curiosity and quite a personal question, but as an investor, how keen would you be if you get, the opportunity to fund someone who's failed, let's say, thrice earlier?
Well, as an investor, funding someone who has experienced three prior failures would certainly capture my attention. Uh, while a history of failures might raise initial concerns,
Mhm,
like in the case of Rahul Yadav of housing.com, but I would be keen to assess their response to those setbacks.
mhm,
If the entrepreneur demonstrates a pattern of learning, adapting, and a continued commitment to their vision,
mhm.
it would indicate valuable resilience and growth. A critical factor would be their self awareness and readiness to address what led to those failures. While caution is important, a persistent entrepreneur with a well defined plan and a clear understanding of their market's needs could present an attractive investment opportunity. But again, I would really analyze the reasons of their failures very keenly.
What is your thought on the funding window? Is it somewhere at the close, or is it quite a long way to go still?
Yeah, see, it's a finance is closely linked to economics. So
Mhm,
the US has been sneezing very badly since the last 1.5 years, for the simple reason that after 2008, they have been printing money like crazy and getting all the asset classes into bubble territory, and people were not used to any kind of risk. They were just blindly buy the top 10 stocks in the US market or top 25 stocks, and they will forever go up. So, people never used to think that Amazon or Apple or any of these companies could be valued more than $1 trillion. And today we have companies at $3 trillion.
true.
So, this craziness had to end somewhere because of the very fact that if more money is in the hands of people and the supply chain was constricted because of Russia-Ukraine war and COVID prior to that. So inflation. So we are talking about 7 to 10% inflation in the UK and the US. So naturally, with that kind of inflation, people lose elections. So that is why the Federal Reserve has been brought out, and they have increased interest rates, and they are still increasing interest rates, and that is causing a huge problem because the flow of money is less, the money is costly, and that's why the asset classes are seeing a downturn. Not to mention the fact that all these years, these Western countries, they were gorging on cheap supply of debt, and the interest bill of the US government alone today is more than $1 trillion per year. So they can't afford the high interest rates, but they can't afford high inflation. So this ping ponging will continue. I think sometime after this US election, Biden will keep on pressing the Fed for high interest rates to curb inflation so that he doesn't lose the election. I think after that, there should be some sense coming back, and interest rates will again start to loosen up, and we might see a flow of money back into asset classes. That's when the funding winter will truly end.
So another slightly controversial question, but do you feel that a successful founder should become an investor? In the sense, aren't the two mindsets dramatically different, or is it something that they can uh, move into?
They always do, right? I mean, so because the decision for a successful founder to become an investor is a nuanced one. While their experience and network can offer valuable guidance to startups, but potential conflict of interest and time commitment should be considered. Like, we have Kunal Shah, invest of Cred, investing in 300 startups. Whether he's able to devote time, I don't know. I mean, looks more like a spray and pray kind of strategy. So successful founders can provide insightful mentorship and resources, but
Mhm.
they must balance their own ventures with investing responsibilities. So it's important to recognize that investing requires a different skill set, and not all founders may excel in this role.
Exactly.
Ultimately, a well thought out approach aligned with their goals and capabilities, both, can allow a successful founder to contribute positively to the startup ecosystem as an investor.
raised very valid points, because let's say even in my case, like I've done it, this is my third company that I'm part of the team, in leadership team, and I have seen that that I just need things to happen very fast. So this is something that and investment is a game all around patience. So the mindset, that is why I was intrigued that how different is it when it comes to the mindset.
Look at India. We are a country with people say we are 300 million, 400 million middle class.
Mhm.
But if you look at the numbers of the e-commerce companies, specifically so because people have to pay online, so you have to have a certain salary to pay online and afford that kind of a thing. So the real numbers which these startups are touting, and they are claiming that the real number is close to 10 to 15 crores middle class. So, what I'm trying to say here is that the monetization takes a long time. I mean, it's only after persistent funding winter and problems with Chinese investors that today we are seeing that Zomato turned profitable, and Nykaa, of course, was slightly profitable, but
Mhm.
others they are trying to show profitability. Paytm is on the path of profitability.
Yes.
And I don't blame them because in India the numbers come fast. So the base gets built up. But the monetization has to be, it's a very sensitive subject because the purchasing power is really less. I mean, we are 2,500 USD purchasing per capita income.
Mhm.
And we are talking of comparing with China, which is 12,000 or 13,000, and the US, which is 60,000 plus. Even a small country like Malaysia is more than 10,000 per capita.
Wow.
So monetization is a perpetual problem. So investors have to be patient
Mhm.
because the numbers will come. You can build your business by testing the different monetization strategies. So a lot of patient money is required, which means that the angel investor who comes in first,
Mhm.
he has to bear the brunt of actually waiting it out.
True. True. Excellent point. And how important is education when it comes to a founder? So, like, do you look for somebody specifically who's an MBA from a premier B school or something of that sort?
Education, particularly an MBA from a premier business school, can offer notable advantages to a founder, but its significance is contextual. An MBA provides a comprehensive understanding of business fundamentals, strategic thinking, leadership skills, which can aid in making informed decisions and navigating complex challenges. The networking opportunities in such institutions can connect founders with mentors, investors, and potential collaborators, amplifying their startup's growth potential. However, an MBA importance should be balanced against its potential drawbacks. The substantial cost. Masters Union, like I was there as a judge in one of the events, 27 lakhs. And it's not even a degree, right? So the substantial cost and time investment, I mean, it could limit resources available for the startup.
Mhm.
And practical experience is invaluable in the dynamic startup ecosystems. And some people argue that the hands-on learning gained through entrepreneurship or industry-specific roles might surpass theoretical education. So I worked in Deloitte and Touche. I've been in brand capital. I've
Mhm.
handled treasuries which were more than $2 to $3 million, and I have reported to a PE fund. So I can tell you that those experiences are also like very valuable,
Mhm.
more than academic experience. Not putting the academic experience down, but success isn't exclusively tied to formal education, and many accomplished founders lack traditional business degrees. And recently, there was a study which came that in the mid cap index, the companies which form the mid cap index, more than 50% founders of those companies are now not even graduates. So
Wow.
the families seem to be moving away from typically a degree kind of approach. But
Mhm.
creativity, resilience, adaptability, and industry specific knowledge can be equally decisive.
So how do you evaluate the leadership abilities in the founder or the leadership team, in the sense you're not really involved in the daily on the ground activity? So how do you assess this?
Well, assessing leadership abilities from a distance requires a multifaceted approach. Past performance, clear communication, strategic vision, team building skills, and adaptability. They are the key indicators. Analyzing public presence, decision making, delegation, empathy, and external relationships offers insights. While not directly involved, observing the team's growth, innovation, and ability to navigate challenges provides valuable context. So, so that's the way we look at uh, analyzing a leadership from the outcomes which the companies are showing primarily.
Very interesting. So my final question is, what is the best advice that you've ever received?
The best advice is similar to the advice uh, which Steve Jobs said he received, that the journey is more important than the destination.
True.
Not all companies will become unicorns, and of course, but they will reach somewhere because they are persisting with a certain sector. So it is important to enjoy and learn from the process rather than solely fixating on end goods. In the context of startups and life, it underscores the value of perseverance, growth, and the experiences that shape us along the way. I remember my grandmother used to open a box of sweets whenever one of my father's brothers, there are seven brothers, used to do some exciting sale in the shop. And he used to announce that today we did this. And they always used to celebrate that. And
Absolutely.
those small celebrations, they have stayed with me till date. That sometimes we just take everything for granted and we don't forget to be happy on the small steps.
So really interesting chat, Tushar. Thank you so much for having taken the time out as well, and wishing you the
My
very
pleasure.
best for the future.
Thank you so much. Pleasure speaking with you.